traders at Axis Bank expect the fixed income market to remain bearish as investors maintain a cautious approach due to uncertainty in market dynamics. Femi Adeola, Treasury Team Member at Axis Bank, joins me now for more market updates. Femi, thank you for joining us today.
Good afternoon, Esther. Thank you for having me.
Well, let's start with trading action so far. What can you tell us across some different market segments?
Okay, so to start with the money market update, we saw the market open with a credit balance of 968 billion naira. This was up by 168 billion from the previous week. This was largely due to FAC inflows. However, as the week went along, we saw the CR maintenance debit by the CBN on Monday, and we saw the CBN float 2 OMO auctions, something that hasn't been done in a while. So this mopped up a lot of the liquidity in the system and took yields higher across the space, across the bond space. So we saw the yield on the 1-year OMO close as high as 17.5% on Monday and 17.9% on Wednesday. And we expect this bearish trend to largely continue. On the OPR and overnight rates, we saw rates close as high as 20.08% and 20.6% respectively yesterday. This is due to the lack of system liquidity. In the Treasury bill space, we expect bills to continue to reprice higher. We saw the 24th October bill trade as high as 14.9% yesterday. This is up from 13% where it traded in the last auction last week. In the bond space, we've seen investor apathy as investors are able to get more attractive yields in the short-term OMO and Treasury bill space. So we've seen largely cautious trading in the bond space. But that being said, on the 10-year bond, the 2033 bond, we see rates as high as 15.4%, and on the 30-year 2053 bond, we see rates as high as 17.05%, and we expect rates to continue to price higher.
Now, for the just looking at listening to you talk about the 1-year T-bill, OMO bill, is quite high, 17.5%. But do you think, that being said, is there still more headroom for an uptrend?
Yes, we definitely still see more headroom. So currently the yield is about 21.5%, which is still below inflation, so it's still a negative real return. And the goal of the CBN is to attract FPI inflows back into the system. So we see further room for further increase in rates on the OMO space. And also it's a way for them to control inflation and also mop up liquidity to reduce speculation on the USD. So we definitely see room for further increases in rates in the OMO space.
Well, speaking about USD, where's the naira today?
So the NAFEM market closed at 838 naira yesterday, which was a slight depreciation by 38 naira from the previous day. There was a big news announcement earlier this week. So late Wednesday, the CBN began clearing some of its matured forward backlogs with some of the banks. We heard that they cleared as much as 70 to 80% of these backlogs, and this caused optimism, and so we saw an appreciation in the NAFEM market. We also saw renewed interest from FPI and foreign investors as we began getting calls to ask if we expect the CBN to keep clearing these forward backlogs, which we expect them to do, and we expect this positive trend to continue. And we might see a further appreciation in rates in the NAFEM market.
Does that also mean that we could be seeing, maybe sooner than later, a fair value for the naira? I mean, would that be hard to determine?
So it's still largely very hard to determine, specifically because demand still outweighs supply. But what we are seeing is definitely steps in the right direction by the CBN. So going into year-end, there have been several predictions that naira is expected to settle at somewhere between the 800 and 850 rates according to various analysts. But like I said, it's very hard to pick a rate given there are so many dynamics that are influencing where the market will eventually settle.
All right, Femi, thank you for talking to us today. We appreciate your time on the show.
Thank you for having me.
That was Femi Adeola, Treasury Team Member at Axis Bank, taking us through trading at the fixed income and FX market here in Nigeria.